Give you a little guess at that. You know how the Fed combats recessions, right? We talked a little bit about this on Saturday. They print money.
You know it, man. I've seen those machines at work. And to your point.
So, anyways, the point about the recession is that when the nation is at risk of recession, the classic way that the Federal Reserve combats a recession is they print money, right? We move from quantitative tightening to quantitative easing. And by quantitative easing, I mean the printing of money, the injection of liquidity and capital into the economy. So, during COVID, that looked like stimulus checks, right? More than likely, what we're going to see here is rate cuts. And when we come over to the Federal Reserve watch tool, let me bring it up again and share this with you guys. We have the watch tool here is giving a 90% chance of rate cuts in June. So we have a 10% chance of cuts in May. It's probably not going to happen in May. If it did, it would be very bullish. Like if rates got cut and the odds are not in favor of a rate cut, that would be incredibly bullish. But whatever this tool shows is really always what happens. But we're looking at that 90% chance of rate cuts in June. And that's going to give the fuel that's needed in the bull run.
Hey, I'm
What
back.
happened to you?
I know. I was literally there, and then I thought you disappeared on me, and I was like, "Where did you go?" And then I looked down, and some reason my internet. I don't know.
Do you remember what you were getting ready to say?
I was telling you that article that you were talking about was related to something I read online about BlackRock saying that they believe the recession that will be inbound will boost crypto just right through the roof, which happened with COVID too. A lot of people lost their jobs with COVID, and guess what happened? Literally, like the news of COVID crashed the market to, I think Bitcoin went down from like 20K to 3K to 69K. Rocket. It's a springboard.
Did you say 69K? Why is it got to be 69K?
I don't make the numbers up. That's just what it is.
Okay, carry on. There's an important point about that. Like it's a catch-22. Like nobody wants a recession. It's hard on families. People, unemployment goes up. People lose jobs. Stuff gets more expensive. And it's a hard economy in a recession. But 69,420.
You know what they say, Trent? We're like the greatest. What's the word? The greatest like distress in history or whatever is where the greatest opportunities come from.
Exactly.
So yes, it's going to be scary, but that's where you will make your generational wealth is in those opportunities that come.
Yeah. Hey, and one of my favorite YouTube videos of all time is like a grainy 2010 YouTube video. You gotta look it up later, of a guy named Phil Robertson, something like that.
Duck Dynasty?
No.
Phil Robertson though.
Yeah. No, oh sorry, this guy's Phil Davison. Sorry. Phil Davison. And he was running for like a county treasurer office in Stark County, Ohio. And this guy gets up to give his speech and gives an absolute diabolical rant. And he starts, one of his points, he goes, you know what they say? And he's screaming at the top of his lungs. He's like, you know what they say? In the middle of opportunity, and his voice cracks. And then he's like, he gets the quote wrong. He backpedals it. And he goes, in the middle of difficulty. I mean, in the middle of difficulty lies opportunity. But it is true, though. In the middle of difficulty lies opportunity. Like, nobody wants a recession. But if you're in good assets, with a good value proposition that have utility, that are fundamentally strong, that have good tokenomics, if you're in crypto, it's going to be a good time for your bags. And again, just to recap, the reason for that is very simple. You have rate cuts being good for risk on assets, right, in the market, right? And most of the money in the world, we know, is actually credit. So, debt is cheaper to buy.
And I think that's actually like 99.9% of all cash is not cash. It's all credit. You know what I mean? Because it's like houses and homes and bonds and gold and certificates. You go to the bank and ask for 10 grand, they're going to laugh at you. They're going to come back in a month. You're lucky if you can even come back in a month and they'll have it.
Right. So debt is cheaper to buy as they cut rates. We have a 90% chance of rate cuts in June. And the other thing that we're going to see, because they do it to combat a recession, the way that you combat high unemployment is by printing money and injecting that money into the economy through various forms of stimulus. And I don't just mean stimulus checks, I mean stimulus for companies, because it frees up the capital that's needed for companies to keep more employees and keep income coming through people's pockets, so it's spent in the economy, and the GDP, the economic growth, can continue to rise, or at least not fall. So it's all one big circle. And when that's a broken system, but when that circle gets disrupted, the way that they bandage it is to print money. And money is printed, the value of the dollar goes down, and the price of Bitcoin valued against the dollar goes
Up,
up and away.
up. Like the chart you showed us last time, the amount of dollars in existence is always going up, and I was like, that's kind of a scammy looking chart. And at the
Yeah.
same time, the price of Bitcoin always goes up, not because it's scammy, but because the amount of dollars that are being created are causing it to go up, because Bitcoin's a finite amount of supply. And I think I've did the math on this before, Trent, and you could correct me if I'm wrong. Actually, I think I made an older video about this, is that there's only 21 million Bitcoins in existence. And I looked it up this is 4 or 5 years ago. And I was like, how many millionaires are in the world? It was at the time, it was like 133 million. And I was like, there you go. If you're a millionaire and you want to own one Bitcoin, it's not possible.